Hey everybody, it's Mike from Orderflows and welcome back to my channel on order flow trading. Lately I've been talking a lot about imbalances, and yesterday I got into, trading in areas where there's lack of volume. And again, when a lot of people think of order flow trading, they think of the old days, with the traders standing around in the office in the 1920s or 1930s. You've seen them, all those old movies, guys standing around this vacuum tube looking at the ticker tape, right? And they're analyzing for big trades. Now, that is one part of analyzing order flow, right? You do want to be aware of, where the big volumes are going through. And, when you start getting into other markets, though, it's not as easy as that, because, like in the E-minis, right, which is what most people trade, or even the NASDAQ or even MNQ, big volume stands out. But what if you're trading in a market that trades big volume, right? Like the Treasury notes, the 10 years, the ZN on the Chicago Board of Trade, right? And you can see at price levels, it's trading 10,000 contracts. Now, this is a 4-range chart. I prefer to look at Treasuries on a 4-range chart. I've done this for over a decade. Looking at the 4-range chart, I don't really see a need to deviate to a different type of chart. If you're trying, honestly, if you're trying to look at it, the footprint on a 1-minute chart, it's going to be difficult to really, wrap your head around and try and make decisions, right? This is a simple 1-minute chart on the Treasuries, and let me just make a quick adjustment here to the candlestick size. Expand it up here, and if the market is basically trading one price, like here at 109.30 for the bar, you're not going to be able to really get much out of that, right? You're going to need some sort of movement, some sort of solid aggression, because in this case the market is just basically trading the bid and the offer, right? Just as over here, right? So that's why I like to look at Treasuries, because they tend to be slower moving markets, but they trade big size. For example, right, we just traded in 1 minute here 1151 on the bid when it was 109.30 bid, 1379 when it was 109.30 offer. So close to 3,000 contracts. Well, it's 2,500 contracts in that 1 minute, but it's just trading one price. So how are you going to analyze that? It's difficult to really analyze that, because you got big buying on the bid, big buying on the offer. And what I settled on years ago was watching a range-based chart in Treasuries, like bonds, 10 years, 5 years, etc., that trade generally decent-sized volumes that make the chart easier to read. Because at the end of the day, you want to be using a chart that's going to help you understand what you're looking at, especially in the order flow. And like I said, this is a market that trades big size. There's always big size on the bid, big size on the offer, and big size that's going through, right? You can see down here when it traded all the way down to 109.31 and a half, 6,429 transacted on the bid, 6,239 transacted on the offer. So that's a lot of volume going through. So if you're looking at big volume only, where's the value, right? It's a market that trades big volume. So what I've always liked to look at in Treasuries, and even in other markets, is areas of small volume. Okay, so for example, today, right, we're going up, making new highs. We made a new high around 911, and then started coming off, made a run back up to that high, and you trade 3 contracts here on the offer, 1 10 6.5, right? Just 3 contracts. So what happened? Traded 245 on the offer up here, but again, as you're going up, it's trading a lot of volume. 8,000 on the offer, 5,000 on the offer. You see this strong volume all through these bars: 6,000, 4,000, 5,000, 4,000. Then it comes up here, it trades 3. Huh? 3. What's that telling you? Right? It's telling you, it's screaming at you, hey, there's no interest up here, right? Just 3 contracts traded. And then it starts selling off. So if I know, right, if I know that just 3 contracts trade, and how do I know? I just look at my freaking chart. It just shows me that. It's about putting the pieces of the puzzle together. You're having a pull back up to this high, and again, if you're going back up to the high, what's your thought? Oh, maybe we could break through that high and go higher. Well, what do you need to do that? You need buying. You need strong, aggressive buying. And if you look up here and you see only 3 contracts, the market's telling you, hey, traders aren't interested up here. They're not interested to take it any higher, because maybe the move got exhausted, whatever. Nobody's interested. That's the important thing. Market starts coming down, sells, rallies back up. It still got that area here, 3 contracts traded. You get 1 tick below. It trades some volume, 500 on the bid, 871 on the offer. Nobody's interested. Traded back up here at 6.5. Market starts coming off. You can see this bar trades 1, comes off, trades some decent volume down here, right? The 6,000, about close to almost 13,000 contracts, about 12,500 contracts, bounces back up, going back up. Okay, well, maybe, this is going to be our intermediate low, and we're going to start rallying back up. And then you see 4, right? Sort of the same thing here, right? You saw the 3, right? You sold off, came back up, 3, sold off, starting to come back up, 4. Then the market sells off, and it's just the market. Just all you got to do is just look at the market. It's not rocket science, right? Just by seeing these areas of thin volume is going to, put you way out there in front of everybody else that's not looking at volume. Because, if people are following price action, or fibs, right, they're going to take the low to the high here. I don't know what this is. Let's draw let's get a fib tool here. Where's my drawing tools? Retracements, go from the low to the high. Here's your 50% retracement right in here. This is 61.8. So, we're right around the 50%. And, I know a lot of people, they will do this. They will buy, they'll draw the line from the low to the high, look for the 50% retracement, and just buy it right there. That's why why there's a lot of volume transacting down here. There's 5,000 on the bid here, 6,400. That's right at 50%, 110 even. You get this bounce up. They're looking for the market to go up, take out this high, and go higher. That is a legitimate trading strategy. I also look for 50% retracements. I even have a special tool for that, but more on that later. But then you start rallying, and it just runs out of steam here. Trades 4 contracts. Okay. Well, what do you think the market's telling you? Again, it's telling you the same thing. Buyers aren't interested to take it higher, and you see the market sells off to basically to the close of the day. Now, let me just get this off my chart there. Now, we do have a tool on, again, if you're looking at a normal footprint chart on a market like 10 years, you could see that plain as day, right? You'd have to have cataracts not to see that. But we have a tool, right, on Orderflows Trader in the settings, Exhaustion Prints, okay? And what that's going to do is going to draw out these areas or highlight these areas where there's potential exhaustion coming in the market, right? Here, you can see it here, even there was some here. So don't you want to know that you're up here near the high of the day and you're seeing some signs of exhaustion? If you're at the high of the day and you're seeing buying exhaustion, right, because it's coming at the top of these red candles, that's a bearish sign. Just as if you're at, sort of off the low of the day and you're seeing exhaustion here, in this case it's bullish exhaustion, the sellers are getting tired of, trading down into the lows. It's going to give you a potential nice move, okay? It's just nice to have these things drawn on your chart. Like here, this was last night, right at the high of the day, 3 contracts. Here we hit the high of the day, start selling off 1 contract. Okay, you had the 3 here into the new highs. High of the day, 5 contracts. Let's just go back. There was remember last week there was something that really stood out. Let's add a few more days here, really quick. All right, let me scroll over here. Okay, that was there. Boom, boom, boom. Now, this day we had a very big move down. I had set it at 5. Okay, so I'm just seeing volumes of 5 or less. This is 7, right? Still a small number. 9 here. But look at this up here, right? You hit the swing high up here, 27. You sort of come off going sideways. 3, 2, and then it drops. And, right? Again, very similar. This was on what? The 8th is very similar to what it looked like today, right? You hit your high, sort of start coming off, rally back up, 5 contracts, sell off, rally back up, 1 contract, and sell off. Okay, so again, Orderflow is just not about looking for areas of heavy volume. You also want to pay attention to these areas where there's light volume. Okay, and again, most of us trade E-minis, MES, MNQ, NQ, but you know there's a lot of other markets out there. Honestly, I see a lot of traders posting stuff on these groups that I'm in about how trading is so difficult, and then I started reading on about what they're trading. They're trading Nasdaq, right? They're using like a 4-point stop in the Nasdaq, and 4-point stop in the Nasdaq is you're gonna get blown out, pretty quick sometimes. And things like that. So there's plenty of other markets that you can focus on other than the stock indices that can give you great trades. I mean, if you're trading 10 years, right, all you got to do, if you're positioning yourself right, you catch the major trend, you're golden for the day, right? You don't need to be scalping in and out. You can trade it more and more relaxed pace. And again, expand your trading horizon besides just the stock indices, right? Especially sometimes, you feel like trading stock indices at the end of the day, you feel like you've been, swimming upstream or in a wrestling match and you're just exhausted. There's plenty of other markets out there that can give you, golden opportunities that you can take advantage of that just stand out, like what you're seeing here on the 10-year notes. All right, everyone. So thanks. I hope you found this video helpful. If you did, please be sure to subscribe to the channel. And I'll catch you guys on the next video. Bye-bye.